So what is an SMA or MA, and how can you use it to become a profitable trader? Well, it all starts with a Google search. A simple moving average, or SMA, is the average of a selected range of prices, usually the closing price by a number of periods in that range. So to make it very simple, let's say you have a 50-day moving average. Well, this will track the last 50 days that the stock you're looking at closed. The price that it closed when market closed is the price it'll use to average into this. Another quick example would be looking at our WeBull account. Oops, sorry. Here we go. And looking at Tesla. Okay, now Tesla has been on our radar for a while, doing these educational videos. But hey, that's okay. Everyone knows who Tesla is. Now, we did just do a video recently on what the EMA line is, the exponential moving average. But you may not know what the SMA is, or the simple moving average. And as they are very similar, they are definitely a little bit different, as the EMA line is calculated by using a couple of formulas, and it's a little bit weighted, giving it a little bit more of a response and a little bit of a quicker response to what the market is doing, which means it can track it a lot closer than if you tracked it longer, right? So now this is a 45-day. You can use a 5-day EMA as well, but on the 200-day moving average, we're going to be talking about this green line right here. Okay, and again, if you want to learn more about what the blue line is and the EMA 45-day moving average, then I have a video on that. Now, you're wanting to know what the SMA is. So the SMA is simple moving average, and it's weighted by the close each day that the market is obviously open. When it closes, whatever price that stock closes at gets averaged over 45 days, 50 days, 100 days, 180 days, 200 days, whatever you want specifically. Here's all the different lengths: 200, 180, 45. I have mine adjusted. Here you got the same thing: 45, 60, 10. You can even go down to 5 days if you want, right? But the green line is definitely going to indicate more of a solid direction. Now, as the 45-day moving average can show clear signs of direction and acts as a support and a resistance, the SMA line can do the exact same thing. Now, it doesn't move as strong as, say, this one would. As you see, the blue line is going up, going down, going up, going down, and this one just kind of curved, like it was going down and then it started to go up based off of this, and then started to curl down based off of this, and now starting to go back up based off of this push here, and now starting to curl over. So it's not as aggressive as the blue line, but it can show overall direction, especially when you're looking at something like this. It has a clear downward trend. Okay, we can obviously see this downward trend here on the green line. All right, and we have this indication that, okay, hey, maybe this is bullish because I want to trade it down at 176, and I think it's going to go to the moon. Well, it doesn't go to the moon. It simply kind of consolidates in this channel, touches this green 200-day moving average right here, goes up about 14%, so that'd still be a decent trade. But what happens as soon as it hits this green line? It sells off, indicating that, hey, maybe this wasn't as bullish as I thought. And when you get yourself in a downward trend with this green line, then it allows you to better understand, hey, this maybe isn't quite bullish. Maybe I should wait for a better setup, something like this. Now, maybe that's not a good example. Maybe something like this, where I'm a little bit uncertain. I'm not sure whether it's going up or down. It's a little choppy here. There's a lot of consolidation at this support level. I do believe it's oversold using some of my other indicators like the RSI, the MACD, and I do have videos on those indicators as well. But with all my research, I think I still don't have a clear idea. So using this indicator specifically, the simple moving average or the moving average, you can then understand, hey, this is actually starting to curl over and show signs of an upward direction. I might be able to benefit off of this by buying when this blue line crosses over the green line. And I have a video on that as well, explaining what exactly it means when the 45-day exponential moving average crosses over the 200-day simple moving average. I have a video on that as well, because that is a whole different ball game. Okay, that's a whole different thing that you guys should learn. So watch that video next after this. When it starts to show signs of progress, and just a little sneak peek on that, when it crosses over, it can be bullish, as well as when it crosses over this way, it can be bearish. So just a sneak peek if you don't want to watch a whole nother video. But as it crosses over, again, you identify a buy signal. You buy here. Now you get a little bit weary and a little bit concerned as, okay, this has a huge pullback. You're now up 57%. Now you can sell and lock in profits, but maybe you hold because you think it can go to $300. Now, why do you think it go to $300? Because you've identified this green line starting to go up, the 200-day moving average, and this little pullback here is no concern. Unless this blue line, 45-day, gets way down here to this green line, or the actual company dips below, like you see indications here, would then signal a sell. Right? So I'm doing good. I know that this was not that significant, as the green line didn't move either. It wasn't weighted in as much. So I know, hey, this is nothing. I can wait, even double down if I wanted, and ride this up. I can also wait for this to confirm, okay, it pulled back significantly, or it pulled back all the way to this SMA line and broke the line. Now I'm going to sell at this point for maximum amount of profit, 47% profit, because you're thinking, well, maybe it could have bounced and continued to rise. You could also sold at your target price of $300, knowing that, hey, this went up to 300. And if it did end up pulling back and missing that point, you could have sold out safely with those profits by identifying that upward trend that the SMA line can cause. Now, just like it can show downward trends, it can show upward trends. And I hope this video helped you understand exactly what the SMA and MA lines are and how you can use them to become a more profitable trader. Thank you guys, and I will see you in the next video in our Learn to Earn lesson library. Thank you, and remember, smash that like button and subscribe if you find value in what you see here. Thank you guys.